What's up, everybody? Welcome back to Trades and Gains. And this is what the market likes to call the last 2 weeks of the year, where fundamentals go to Cancun and vibes run the portfolio. Because apparently in America, when inflation is cooling, jobs are softening, debt is exploding, the solution is quite obvious. Send out $1,776 checks, create surprise holidays that no one knew existed, and rename buildings after yourself. That's not fiscal policy. That's QVC for voters. But hey, markets don't care why the money shows up. They only care that it does. And that's why today's market feels like the Santa rally on the charts, political fireworks underneath, and a valuation hangover waiting in January. So let's go ahead, make like some butt cheeks, and break this down. We're going to talk about what matters, what's noise, and what traders should actually do in these types of scenarios. So let's go ahead and talk about Trump's 24-hour stimulus speed run. In less than 24 hours, Trump rolled out $1,776 checks to active duty soldiers, surprise federal holidays, cannabis reform headlines, moon missions, and a renamed Kennedy Center. That's not governing, that's throwing every dopamine lever at once. Now, why is this happening now? Well, because approval ratings are starting to slip. And no, we're not talking about the type of slippery at a Diddy party. Jobs data is looking uglier than two cousins kissing in Alabama. Midterms are creeping closer. And this is optics-driven economics at the end of the day. Now, here's the key market takeaway. None of this fixes inflation. None of it fixes housing. And none of this fixes energy. But it does inject confidence, and confidence is the currency market's first trade. That's why you're seeing risk assets stay bid, volatility compress, and dip buyers starting to reactivate. This isn't stimulus, it's sentiment engineering. Now let's talk about the Santa rally, because apparently it's back. Wall Street's favorite holiday tradition is alive, the Santa rally. Goldman, Citadel, and Susquehanna all saying the same thing. Don't fight seasonality. Here's why this rally is sticking. Volatility is collapsing. There's 100 billion plus in equity flows. Systematic funds are re-leveraging, and retail is still buying calls like it's a sport. And yes, tech is leading again. But here's the nuance. It's like when you want to scratch your ass in public, but you don't want anyone to see that you're scratching your ass in public. This isn't AI Mania 2.0. This is positioning repair, year-end performance chasing, and at the end of the day, volatility math. The translation of this in plain English, though, pullbacks are being treated as inventory restocks, not exit ramps at this point. Now, speaking of exit ramps, we have Nike. It's the consumer canary. Let's talk about our buzzkill. And no, I'm not talking about buzzballs, but buzzkill. Nike, down double digits. China sales, well, they're collapsing. Converse is falling apart faster than its Chuck Taylors after you've worn them every day for a year. This isn't just about sneakers. Nike is telling you a couple things. China consumer is still broken, the discount culture is entrenched, and brand loyalty is fading faster than, well, let's be honest, you dating an Instagram model. And that matters because China was supposed to be the growth engine. The middle class recovery, well, that's not happening. And global consumer demand is uneven at best. So when you hear soft landing, Nike says, yeah, in North America, but not everywhere else. This is why consumer stocks are diverging. This is why selectivity in 2026 is going to matter. Now, moving into emotional beings, let's talk about Oracle. It's the most emotionally unstable stock of 2025 if we were going to give it an award. One day, AI spending is unsustainable. Debt is scary, and data center funding is stalled because Blue Owl pulled out faster than someone who didn't want to get a girl pregnant. Next day, they get a TikTok deal, a national security partner, and their cloud credibility is somehow restored. Here's the truth. Oracle is becoming infrastructure, not hype. TikTok's US deal matters because US data is going to stay domestic. Oracle becomes the security layer. And this isn't AI, it's just regulatory compute. That's sticky revenue. And no, I'm not talking about the stickiness that you have to wipe off your back. This is actual stickiness. So, yes, Oracle is volatile, but volatility is what happens when a company transitions from enterprise software to national infrastructure. Traders should stop trading Oracle like a meme and start treating it like a levered utility with optionality. Now, let's talk about the politics plus the markets, which equal our 2026 setup. Here's the real setup into 2026. Political pressure, well, it's rising. It's rising faster than a dude who took too many blue chews on a first date. By the way, this video is sponsored by Blue Chew. Use hard 69 to get 20% off your first month's order. Labor market is starting to soften. The Fed is inching towards neutral, and inflation is cooling, but sticky in services. The translation: no austerity, no Volcker movement, and no dramatic tightening. Instead, we're getting managed slowdown, controlled stimulus, and a narrative management. Markets, well, they don't crash in that environment. They churn higher with rotations and drawdowns that punish laziness. So let's go ahead, make like a condom, and go ahead and wrap this up. What matters right now is seasonality is your friend. Volatility, compression supports equities. Political optics equals short-term bullish bias. Now, what are we going to respect? Well, consumer divergence. Think about the Nike warning. China exposure risk, AI funding sustainability, and then how to trade all this. Buy the dips, but don't chase breakouts. Favor infrastructure over hype, and expect January to be messier than December. And I'm talking like Mormon wives messy. This market isn't euphoric, it's managed optimism. And managed optimism is exactly how bubbles get stretched without popping in this case. So, yes, Santa showed up, stimulus checks are flying, and stocks are partying like they're doing cocaine in the bathroom and it's the 1980s all over again. But don't confuse holiday cheer with economic healing, because January always shows up sober to the party. I'm Max Pitts. This is Trades and Gains. Make sure you like, subscribe, comment your hottest take down below, and don't forget, join Investor Central Club today, the best options flow software out there, because quite frankly, the rest of them are just noise with no real actionability unless you put a million filters on them. Anyways, have a great day, everybody. I'll see you guys in the next one, and wear a condom.